In an industry that runs on code, algorithms, and automated trading desks, Henry Chen keeps coming back to a simpler idea: trust cannot be tokenized. Henry Chen is a Hong Kong-based finance professional and entrepreneur who has spent 15 years moving between worlds that rarely speak the same language. He started in the structured formality of investment banking, helping raise more than $50 billion across hundreds of equity capital transactions for some of Asia's largest financial institutions and technology companies. He then crossed into venture capital, backing more than 40 blockchain and Web3 companies before turning his attention to the deeper work of ecosystem building and institutional adoption. Today he operates at the intersection of traditional capital markets and decentralized finance, focused less on any single deal than on the architecture of the industry itself. In an era where AI can automate many tasks, genuine human trust and lasting relationships cannot be manufactured overnight, Chen said. That kind of track record becomes even more important, not less. Chen speaks from a position of unusual depth. His extensive career incorporates strategic and leadership positions at KU Holdings, the holding company of KuCoin, Summer Capital, Goldman Sachs, and UBS, while he continues to contribute to the global ecosystem of digital finance through his work at SNZ Holding and as founder and director of Swiss Digital Labs. That trajectory, spanning 8 years in equity capital markets at two of Wall Street's most demanding institutions, followed by more than a decade at the frontier of blockchain investing and digital asset development, gives Chen a vantage point that few in the industry can claim. He has raised capital for state-owned Chinese banks, led venture rounds into crypto infrastructure firms, and sat in board-level conversations about regulatory strategy at some of the most consequential digital asset companies in Asia. In each of those contexts, the same dynamic held. The network, the credibility, the trust built over years of working with founders, investors, developers, and institutional partners across both East and West, he said. That is the asset. At SNZ Holding, where he is currently focused, Chen describes his mandate not as deal-making in the conventional sense but as something closer to ecosystem curation. He is backing builders over bets, prioritizing long-term infrastructure over near-term returns, and deliberately moving across the boundary between traditional finance and Web3 rather than planting a flag on either side. We are not approaching the market as short-term traders or speculators, Chen said. We are focused on building durable connections, supporting serious builders, and contributing to the kind of infrastructure and community that can stand the test of time. For much of the last decade, conversations between traditional financial institutions and the digital asset industry followed a predictable script. Banks asked pointed questions about fraud and speculation. Crypto firms talked about disruption. Neither side made much headway. That has changed, and Chen has had a front-row seat to the shift. A few years ago, the main question was whether crypto, Bitcoin, or Ethereum were legitimate at all, he said. Today, the conversation has moved far beyond that. What Chen observes now, in panels, private meetings, and conferences across Hong Kong, Singapore, and the broader APAC region, is something more disciplined and more durable. Institutions are no longer evaluating digital assets as a philosophical question. They are asking how to value them, how their economics may evolve, and how tokenized products including real-world assets can be structured within existing compliance frameworks. Many are taking time to put in place firm-wide protocols, compliance frameworks, and operating policies so that they can support future tokenized products in a structured and scalable way, Chen said. That shows a much more strategic and serious approach to the market. He also points to an emerging openness between institutional players and decentralized finance that would have been unthinkable even 3 years ago. Some security brokers and financial institutions are now exploring how qualified DeFi participants can serve as liquidity counterparties within controlled, risk-assessed structures. The walls between the two worlds, while still standing, have developed doors. Chen's own career reflects that architecture. At Summer Capital, he led investments into Hashkey Group and Amina Bank, now recognized as the first fully licensed crypto bank regulated by FINMA in Switzerland, and worked hands-on with founders and policymakers to build governance and risk frameworks that could survive contact with institutional counterparties. The lesson he drew from that experience shapes how he reads the current market. The future of the sector depends not only on innovation, but also on the ability to work in a proper, responsible, and collaborative way, Chen said. Henry Chen's philosophy toward founders and early-stage companies reflects the same framework he applies to institutional engagement: Look past the surface, evaluate for durability, and back the people who combine vision with operational discipline. The founders I find most compelling are the ones who can translate innovation into real-world adoption, he said. Integrity is just as important. In a market that still faces noise and speculation, strong character and disciplined execution matter enormously. At SNZ, the investment focus has gravitated toward applications that connect digital infrastructure to real economic activity, fintech, payments, AI applications, content and intellectual property, and on-chain finance. Chen is deliberate about what that list excludes. Projects built on artificial token incentives or engagement mechanics with no underlying business model are, in his view, not investments. They are temporary attention. Once the incentive-driven users leave, the model collapses, he said. The strongest Web3 projects combine technical innovation with strong operational discipline. They understand both the crypto model and the realities of building for real users. That judgment extends to how Chen thinks about community and ecosystem development, which he treats not as marketing functions but as core infrastructure. Meetups, builder forums, developer ecosystems, and early-stage mentorship networks serve a structural purpose in his model of how the industry matures. Community-driven initiatives provide a platform to connect active participants and builders, share knowledge, and create a sense of confidence and shared momentum in the ecosystem, he said. They are also especially valuable for supporting young entrepreneurs and founders who are new to the space. The goal, as he frames it, is not visibility. It is a healthier ecosystem. When the conversation inside an industry is oriented around long-term value creation rather than short-term profit, the entire environment becomes more functional and more attractive to the kind of serious builders who actually move things forward. Chen is consistent on one geographic conviction: Asia, and Hong Kong in particular, is not waiting for the next cycle to begin participating in the future of digital finance. It is shaping that future now. Asia is becoming increasingly exciting because many of the most important applications are beginning to take shape here in a very practical way, Chen said. The applications he tracks most closely include real-world asset tokenization, decentralized finance adoption, agentic payments, on-chain credentials, and the tokenization of non-financial assets including intellectual property. These are not theoretical roadmaps. They are products and platforms being built and deployed across the region with increasing regulatory clarity and institutional support. Hong Kong occupies a specific role in that picture. Chen sees it functioning as a bridge, helping bring serious projects and real users into a structured environment while connecting them to the broader Asian market. He also sees himself playing a part in that connective function, drawing on relationships built across a career that has run from Goldman Sachs equity capital markets desks to venture boardrooms to digital asset conferences. The contribution I hope to make is to bring more real users, more serious projects, and more genuine value creation into the industry, Chen said. There is a huge opportunity to support future unicorn companies and the entrepreneurs building them, particularly at an early stage when support can make the biggest difference. In a market that generates noise far faster than it generates value, that framing stands out for what it omits. Global business executive Henry Chen does not talk much about price targets, token launches, or the next bull run. He talks about relationships, infrastructure, and the compounding returns of being present and credible in a space long enough for both to matter. In today's market, he explained, that long-term commitment is itself a differentiating credential.